A handful of stocks in the S&P 500 are trading at what some might call extremes. That is 25% or more above their 200-day moving averages. Some of these names, not all, NVIDIA, Michael Kors, PayPal, Estee Lauder, Pulte Group, and a number of others. Are any of these names worth your money now? Are they all set to fall? Craig Johnson with Piper Jaffray, Boris Schlossberg, BK Asset Management. Craig, let's start off with a stock that you want to chart, because there's 17. We don't have time to go through all of them, which is Kors. Michael Kors. Why are you looking at this, and what is the chart telling you?
Brian, it would be fun to go through all 17, but in terms of keeping on schedule and on time, I pulled out Michael Kors, and the reason I did is that there's a big downtrend reversal, and when you look at the chart of Michael Kors, you can see there's a big multi-year downtrend reversal. And when I see these kind of charts, what you typically see end up happening is a very strong momentum response when you first reverse the downtrend, and then you ultimately back up and retest where you broke out from. I think that's exactly what's happening at Michael Kors. Would I buy the stock today? The answer is I'm going to buy this on a pullback. That pullback could take you right back down to that 40-week moving average that you see there on the chart, and that pullback would be about 20% from where you're at right now. But I would definitely be buying that stock on a pullback, because after a downtrend reversal and a retest, that is traditionally the safest spot to buy a stock, and that's where I'd be buying Michael Kors.
Okay, there you go. Boris Schlossberg, you can look at Kors. You can talk about any other 16 names that you want that are well above their 200-day moving average.
Actually, I want to talk about NVIDIA, because NVIDIA effectively is a trade on Bitcoin. It's kind of a shovels and picks trade, because NVIDIA chips are used in a lot of computers that try to mine Bitcoins. And if you look at Bitcoin, the vicious comeback in Bitcoin all the way up to 7,000, August perhaps a blow-off move all the way up possibly to 10,000. If we get that kind of tremendous upside momentum in Bitcoin, I think NVIDIA follows. So to me, this is the momentum stock to follow if you want to trade Bitcoin on a kind of a peripheral basis.
But are you concerned about Bitcoin over mining? I mean, is this a peak Bitcoin subsidiary play? AMD, another one?
Yes. I mean, so ultimately, it probably will all come down, but I think there's just sort of this final massive possible wave of buying that could take everything back up and extend it even further, make it more extreme even. Sort of the most radical wave you can think of. That's the story of NVIDIA, in my opinion.
Okay. Boris, Craig, thank you both very much. As always, folks, thank you for watching Trading Nation. Hello, Jeff.
Yes, sir.
Hey, it's Brian.
Hey, brother.
What's happening?
I was just in your town. I got caught with no top coat in the Thursday, Friday, Saturday cold blast.
It was cold. You were down in Princeton?
No, I didn't know you were in Princeton. I was in Manhattan, in Midtown.
Oh, no, I live in Princeton, man.
I didn't know that.
Yeah. It's if you got to live in New Jersey, it's not. Oh, you used to live on Sparta?
I used to live at Sparta at the lake there. I forget the name of the lake.
Lake Mohawk.
That's it.
There's a bar there called the Crow's Nest.
Yes, there is.
Right off Route 517.
Yes, there is.
My friend got her arm ripped off on Lake Mohawk water skiing when she was 14.
Oh, my gosh.
She was a champion water skier, and she fell, and they weren't watching, and it dragged her, pulled her arm off, literally, but it was like fall. So the water was cold enough. They grabbed the arm, raced to the hospital, had it reattached. She's got limited movement in it.
Oh, my gosh.
The true story. She goes to college, starts dating this guy, comes home. He invites her over for like Thanksgiving or something. They go to the house. The dad was the surgeon that reattached the arm. She didn't even know.
Oh, my God. Small world.
Small world. They have a house. It's the McLean family. Mimi McLean was her name.
Okay.
They have a summer house on Lake Mohawk.
Nice area.
If you're ready, Jeff, I'm ready.
Yep.
Let's do this.
Yeah, I'm ready.
Welcome to Trading Nation, and today we are pleased to be joined once again by Jeff Sott, Chief Investment Strategist at Raymond James. Jeff, is it possible to be a short-term bear but a long-term bull?
Yeah, I think it is. You know, Peter Lynch used to make the simplest observations, and by doing so, divine these incredibly good investment insights. And one thing nobody's talking about is the Trump rally started on November 7th of last year. And this year, the rally peaked out on November 7th of 2017, just when people could sell the stocks they bought pre the presidential election and make long-term capital gains. I find that a simple observation, but I think it's a pretty good investment insight.
What about all the tax bill kerfuffle? I mean, there's a lot of concern. No one really knows what's going to happen. So do you think that that causes us some uncertainty until we know what this final bill may look like and if it's going to pass or not?
Well, I don't think you're going to get tax reform. I lived in D.C. Beltway, still pretty well connected on the Hill. I do think you're going to get lower corporate taxes, which gives you upside to next year's S&P bottom-up operating earnings, which means to me that stocks are not all that expensive. So even if we get a 5 to 8% pullback here, I think it's a buy in a continuing structural secular bull market that has years left to run. So I think the tax bill is more noise than actual fact here.
Do you worry about, looking at high yield? We talked about that on our show on CNBC today, that maybe the bond market, a flattening yield curve, is signaling like something wicked this way coming?
Yeah, I don't think that's the case. I think the numbers that came out recently on the economy are stronger than a garlic milkshake. I think the economy is a lot stronger than people think. Consequently, I think earnings are going to continue to come in better than people think, and people remain underinvested. They're still worried about a crash in the equity markets.
Yeah, well, when you got all these surveys about bullishness at record high, there's not a lot of cash left. I'm sure you've read these things, you've heard these things, that some people think that stocks are overvalued, but they continue to invest. Why are you able to just blow all that stuff off, Jeff?
Well, I don't think stocks are all that expensive. I mean, if you look at the long-term PE ratio on the S&P 500, yeah, it looks expensive, but there are more high margin, high growth stocks in the S&P than ever before. You've had this tectonic shift from tangible assets on balance sheets to intangibles, which by definition means higher valuations. And if you look at the S&P and take out the PE ratios, the aberrational low PE ratios in the 70s and 80s that were driven by high inflation and double-digit interest rates, and start on January 2nd of 1990 and get the S&P's PE, January 2nd of 91, 92, 93, the average PE up until the January 2nd of this year is 23.85. So I don't think stocks are all that expensive.
It's sacrilege for me to say this, I guess, but do you care that much about the so-called FANG stocks? I promised myself I wouldn't use the acronym, but now I guess you almost have to, even though it makes no sense because Google is actually an A, FANA. Do you care about these names? Do they signal anything other than just excessive trader interest in a few stocks? Do they signal the market, in other words?
I think Google's trading at 33 or 34 times earnings, but the company's growing at 40% a year. So is that expensive? I don't think so. Could we get a pullback here? Your point on junk bonds collapsing is a valid point. You've had a breadth divergence in the latest rally. You've had lower volumes despite the S&P making new all-time highs. There's been big divergence in performance. 29% of the S&P 500 stocks are actually down on the year. So yeah, in the short term, you can be cautious here. In fact, we are looking for some kind of pullback, but I think pullbacks are for buying.
Jeff Sott, Raymond James, remaining long and strong in the long term. Jeff, it was a real pleasure as always, buddy. Thank you for joining us on Trading Nation.
You bet, Brian.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.